Welcome back, investors, to Ticker Time News. I'm Adam, and Etsy, ticker symbol ETSY, is making investors feel like besties. Its shares are soaring higher after the company reported Q4 results and guidance. The Q4 holiday period is typically Etsy's largest of the year, at 30 to 32% of GMS, or gross margin sales, making it a very critical quarter. At first glance, the headline numbers don't really seem to warrant a huge move in the stock's price. EPS, revenue, and GMS did exceed expectations, but the Q1 revenue guidance was below estimates. And Etsy even guided a quarter-over-quarter decline in adjusted EBITDA margin. So why is the stock trading so much higher? Like 16.2% higher. Now, before I give you my 4 reasons why, could you smash that like button, share this video, and click that join button to get our top 10 stocks list. And if it's your first time watching, click subscribe. Thank you, my friends, for doing that. Okay, so here are the reasons why I think Etsy's stock is trading higher. First, the Q4 results were pretty strong. The company benefited during the holiday season from competing retailers who were struggling with congested supply chains. The company notes that the pandemic introduced millions of people to Etsy for the first time, and those shoppers keep on coming back even as the pandemic eases. Looking ahead, Etsy believes that it's in the early days of expanding its market share, largely because of its platform's unique offerings. I mean, most things you can't find anywhere else. Second, Etsy tends to guide conservatively. In the previous 2 quarters, Etsy guided revenues below estimates. But guess what happened? They wound up reporting above the higher end of those projected ranges. The same outcome may be likely to follow the Q1 guidance for revenue, EPS, and margin. To sum it up, basically, investors aren't really buying Etsy's guidance. Third, Q1 is typically Etsy's slowest quarter, so it's not as critical within the full year picture. And the guidance, it's not really that bad, considering that Etsy is lapping in early 2021 that saw federal payments go out to millions of Americans. And then you have consumers with increased mobility, getting out more now than they did back in Q1 21. And this all equates to Etsy seeing higher levels of competition for consumer spending, of course. Now, fourth, on top of earnings, Etsy also announced that its seller transaction fee is increasing from 5% to 6.5% starting on April the 11th. Etsy expects this change to boost earnings, but not to really have an impact on margins. And that's because Etsy plans to spend most of the increase on marketing and enhancing seller tools. The increase shows the confidence that management has that sellers on its platform will indeed pay the increased fee. Overall, the Q4 results were encouraging, and I like the reasons behind raising transaction fees, as this also shows pricing power for Etsy. The guidance doesn't worry me either. In the past, I would have argued about Etsy's sometimes weak guidance, but now I see conservative guidance as a pattern for Etsy and thus predictable. Now, I must admit, I am starting to buy into Etsy's argument that its platform has value and draws customers in because it's not commoditized. Etsy is not, as it commented during its earnings call, trying to sell the exact same commoditized product just 2 cents cheaper or 2 minutes faster. It aims to make buyers' experience on its platform feel specialized and personal, and that's a great way to think about their business. I would be careful about buying the stock until it stabilizes after this big drop in recent months. Well, that's what I think about Etsy's earnings report, but I want to hear from you. What do you think about it? Let me know in the comments below, as your comments make these videos so much better. Smash that like button, share this video, and click the join button to get our top 10 stocks list. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.